like to just do, everybody just give me a chat back if you can hear me loud and clear. All right, Kevin. Good, 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 good. Looks like a bunch of people are here. James, good to see you again. All right, excellent. All right, everybody. Just like to thank everybody from coming back on Closing Bell. It's been a while since we did Closing Bell. We missed the last 2 weeks. First of all, there was a big, big holiday that came up. It was Labor Day. That's always the slowest week. And we're back again regarding, I mean, we did our event last week, but the last 2 weeks before that, because of the summer holiday, it's a very, very slow time of the year. And I can't believe how fast it went. But we're back, and, you know, trading going into September, October, November, personally, and I know my good friend Bryce is going to be telling you that it's one of the best times of the year to trade. This is where everybody gets, you know, third quarter, Q3 comes out. This is where people want to start trading and start to make money and get back to work. And you're going to start seeing, if you haven't seen already, and the market doesn't have to tell you that, but there are a lot of great stocks that had some big, big moves that came out. And this is when you have to start putting your eggs together, start getting ready to start trading, and get focused on what we do best, because this is the best time to learn. So don't want to take too much time away from Price Headley. Just a little bit about him. Price Headley's been around, I mean, I've been doing this for close to 20 years now. And I remember Price Headley going back as far as I have been around. I mean, you can see he's been doing it just up on the PowerPoint over 20 years. But there are very, very few people that we would ever recommend. And obviously, you know, there's a lot of schools out there that are good at certain things, and there's a lot of very, very good speakers and good trainers. And you're obviously going to get the opportunity to meet one of the pioneers who started back when I started. I mean, when I started trading, there was only about 3 or 4 schools that started out. Now there's hundreds of them all over the place, if not thousands. Well, guess what? Price Headley is one of the very few 5 or 6 that started out because we were able to realize how important education is. And the reason why we're still here, because we love what we do, and you're going to see it, just what Price is going to be telling you. So I don't want to take too much time away from Price. He's going to have a really, really great presentation for you to share. So everyone, without further ado, give him a warm welcome and enjoy the presentation, and Price will close out the meeting. Thanks, Price, for coming, and the stage is all yours.
Hey, thanks, Fausto. Always a pleasure to be with you and the Cyber Trader group here. So welcome, everybody. If you can hear me okay, type in where you're joining us from. That always lets me know that you can hear me okay, and love to see where we're reaching out to. I'm in Lexington, Kentucky. I know Fausto's up there near Long Island, and always great, whatever part of the world you're tuning in from, to have you with us. Good. Okay, we're coming in loud and clear. Thanks, Ken from Banning, California, James in Illinois, Yves in Montreal, and many more, Carroll in Pennsylvania. Welcome, one and all. Glad to have you with us. And we're going to keep it pretty fast-paced today because, you know, I'm always interested to know, I guess, what your particular topic of interest is as it relates to what kind of trader you are. I'll cover a lot of things in this hour together or so. Bottom line is, type in also what your preferred type of trading is. If you're more of a day trader, more of a swing trader, if you like equities, if you like options, if you like futures. I'm just always curious to know. I know Fausto does a lot with quick trades on the equities. And so we'll talk about some of those quick trade setups. Ken, your day trader, all, says James. Swing, says Yves, and more. Intraday stock trading, says Shepard. Hey, okay, we'll talk about that and make it relevant to you. And I do a lot with options too, so we'll actually share with you a little bit about, you know, some of the things I look for in options. Just as a reminder, of course, everything that I share with you here is geared for your information and education only in these complimentary web events. Ultimately, you know that you are responsible for your trading results, and just keep in mind that you need to consult with your tax advisor for any investment that you might make that might affect your unique financial and tax situations. So bottom line is, you know, we talk about, you know, the 3 E's of trading in big trends: education, exploration, and then execution. And today we're just really focused on the bigger picture, getting you pointed towards the target, in the right direction. You know, as they say, if you don't know where you're going, any road will get you there. I've never been a fan of that line of thinking. I think you've got to have a very clear roadmap and get pointed in the right direction. And then, yeah, sure, sometimes it's a zigzag path. Certainly it was in my first few years of trading. As Fausto mentioned, you know, I got started trading in 1990, pretty much fresh out of college. I graduated from Duke University, and maybe got a little too confident, a little overconfident in my abilities, and frankly, I thought I knew better than the markets early on. I thought, well, gee, if I've done such great analysis, then eventually the market's got to prove me right that that's a great buy, right? You and I know that's not such a good mindset. So I had some perfectionism issues I had to undo and say, let's get focused on making sure that we're following a system, a method, something that can really point us in the right direction. Ultimately, then, as you get more and more fine-tuned, and we'll even show you a taste at the end of how I do explorations through scanning technology. So the power of the computer, of course, gives you so much amazing power at your fingertips. So when I got started trading in 1990, just to have basic real-time quotes on a Quotron seemed like incredible technology. These days, that looks very primitive. You've got so much power at your fingertips, and then it's about pulling the trigger and executing. So, from this perspective, you say, okay, well, how do you first define that roadmap, define where do you want to go? And that's where you've got to have a clear plan of action. Let me ask you a quick other question. How many of you have a written trading plan of exactly how you're going to manage your trades, getting in, getting out, managing your capital, basically handling exactly what your strategies are for taking advantage of the ins and outs of the market? Just type a Y or an N if you've got a written trading plan or not. Just curious. Usually most people don't. Most people think that they've got some idea in their mind of what they're trying to do to make money in the markets, but most people have not gone as far as actually putting it pen to paper and actually writing it down. And it's no shame. I'm not going to call out any names. You don't have to be shy. Don't worry. But bottom line is that it all goes back to you better have a light bulb. You better have some kind of a better mousetrap, some type of an edge is what I call it. What's your trading edge? If you know you've got an edge, it doesn't mean that every trade's going to win. I think, Fausto, as well as I would always tell you that there's going to be losing trades. It's about managing the losers and then getting more out of your winning ideas. And so a couple of you said mental written trading plan. That's okay. It's a start, right? Take it from the mind and get it pen to paper. There's something powerful about getting pen to paper. And KR says you have one. Congrats, you're in the minority. Bottom line is that, okay, you need to get a plan of action. Now, does this mean it's going to slow you down? No. The bottom line is that it's going to guide you. It's going to be an idea where you can say, look, this is what we work on with our Big Trends coaching students from the ground up, saying you've got to build a solid foundation. You would not build a house without building a solid foundation, right? Because the first good heavy wind or storm is going to cause either to blow your house down or it's going to cause a lot of leaks in your very unsteady structure, right? You want to create the most secure, solid structure you can. A plan is your start in that. Now, for me, I've been blessed to be able to get the CFA charter holder designation, which is a charter financial analyst. Much more of a fundamental analysis designation. Took 3 years to go ahead and get that. And bottom line is, then I said I need the technician designation, the charter market technician or CMT designation from the Market Technicians Association, and that's more of the technical analysis side of the equation. Another few years on that one. But the bottom line is that I'm a big believer, like Fausto was talking about, we both are, in education, constant, what I call, you always want to stay green and growing. You always want to say, okay, what am I learning new today? And you never assume you've got it all figured out, because if you get too overconfident in the markets, the market tends to have a way of humbling you very quickly. You've seen it with some incredibly bright people who have flamed out because they've basically traded too aggressively, didn't know how to cut their losses, or a variety of other trading sins that you don't want to commit. To me, between the fundamental and technical sides, the shorter and shorter term you go, the more important it is on getting focused on technical analysis. And so that's where, for me, I'll show you some of the technicals that I use today. Just a quick overview. I know a lot of you know about charting and technicals thanks to Fausto and all the great training that he does. Bottom line is, for me, I actually started when I was at Duke University. I interned for a broker, and he had me hand draw charts. And I thought that was really a great first experience for technicals back almost pre-computer. I'm dating myself, but into the 80s. And bottom line is that from that perspective, that gives you a real feel for the markets. There's something great about kind of getting that pencil to paper, pen to paper. But with the power of computers now, you've got so much more power at your fingertips and data at your fingertips that you can now start to sort, and we'll show you how we do that with the scanning at the end. But the bottom line is that as a technician, ultimately, news is one thing, but the question is the reaction to news. Now, I can't resist but have to bring in a chart here. What was the big news item today? Did anybody pay attention to a little stock called Apple today? Okay, Apple had their launch. The market was down today. So, Apple ended up down. But look at that incredible intraday chart here. We're going to talk about some of the key pieces. We don't need to look at every single thing here today, but start to focus on some of the key pieces you can look at and say, well, you know what, if we're focusing just on a really simple analysis that I like to use, say if we're looking at strategies here, and we look at the percent-R breakout system. I'll share with you just a taste of how that works here. You'll see here in a second that, yeah, it was given a little buy on Apple with the intraday news. You see it got pounded last week on the Samsung product introduction. But bottom line is we actually were in Apple calls before that event today because we were getting a buy signal on Apple. We actually own the relatively, what I consider relatively safer in-the-money options, the 95 strike calls. And when it started to pop here, we were selling out of our first piece of our position into that pop here just around 101.5 is where intrinsically we sold our 95, half of our position for a 30% gain. Now, it started to go up a little bit more, and we were getting ready to send an alert on the rest, and then it quickly started to reverse. You know what happened with Apple, right? They didn't just announce the iPhone 6. They announced the new iWatch, and they also announced this pay system that's allegedly going to hurt credit card providers and PayPal, which is why eBay took a hit. But the bottom line is that look at what Apple did by the end of the day. Once it was all said and done, guess what? We opened the day around $99, $99.08. We closed the day down about $1 from there at $98. You could say, yes, the market was down, but for all the hype, all the excitement of that news, and you see we got a first profit, our trailing stop got hit on the rest for about a 10% gain after a 30% on the first. And again, there's no guarantees on any one trade, but if you follow your system over time, you see it was a good thing we stopped out the rest here as it trailed back down, because the bottom line is then it went down even more. So if you were looking at that option chart, we're going to talk about option charts in a minute. And again, if I'm going too fast for you, I apologize. I kind of can't help myself. I always want to get more to you than less in our time together. So you see, we're in that option for about $5 here, and you see it starts to go up. It gets a little pullback, what we call a retest on the percent-R. Then it flips up again. And when it's flipping up to $6.50, that's where we sold our first half in here. Was getting close to what, about 8.25 at that peak, and then it starts to come back down. We said, oh, it didn't quite get to that doubler we were shooting for, and so we said, okay, we've got to put our trailing stop in down there under 5.5, and boom, under 560 actually, and it triggered at 5.5 right down in here. So you see, you say, wow, that was some crazy volatility. That's why I like to sell partial positions, take half your money off, and then let the rest run. So bottom line is, by the end of the day, if you were in Apple off of the open at 505, you see it close at 370. If you trade options, you wouldn't be too happy with that, right? Well, that's why you've got to be a little more proactive in how you take advantage of these situations. But even trading the stock, if you were just buying and holding the stock, you wouldn't have been too happy with that. So that the reaction to the news, coming back here to the PowerPoint, make sure that's coming up across, is the reaction to that news is what counts. So, and that's not atypical, actually. That's fairly typical of the fact that Apple tends to sell off after they have their big news conference and their big kind of excitement phase, and then there's usually kind of a sell the news reaction. You've heard the old Wall Street motto, buy the rumor, sell the news. So you tend to see that in general off of these events. It doesn't necessarily mean it's the end of the world for Apple. It just means you've got to pay attention to these patterns if you're a technical trader. Now, as we say, okay, so what's the goal here? So take advantage of the fact that, yes, the markets are driven by buyers and sellers, supply and demand. In the shorter term, they're even more particularly driven by fear and greed. And you'll see a lot of people get too high on a move up, and they'll buy too late into a rally. And likewise, they'll also panic and sell out a lot of times right near a short-term low. So we want to be careful to not get into that psychological fear and greed reactive type of trading. Now, within technical analysis, there's three big assumptions I tend to focus on, which is that the markets are discounting mechanisms. People have been expecting this news on Apple for weeks, if not months, right? So bottom line is that we knew it was coming up, and frankly, Apple was not acting that great in the days in front of this news today, so we knew it was going to be a very quick trade. These details get factored into the stock's price. So, the market was already anticipating that. Now we see what happens from here. What are the next surprises? Will there be enough iPhone 6s to meet the demand? Will demand be what they expect? Will it be bigger than expected, less than expected? Remember a couple of years ago, Apple had a supply problem on the iPhone 5, and the stock got pummeled because of it, because it didn't anticipate how many they needed. So all these things are important. So trends are what, of course, my site's bigtrends.com. Trends are what I focus on. I'm looking for meaningful trend movement, meaning that as investors, we all, and as humans, we all are emotional, and we have to realize that everybody wants more gain and less loss. Think of it the other way. They want more pleasure and less pain, right? Psychology 101. So what that means is that technical analysis actually works because when something starts trending up, more and more traders will pile on, and as well as investors. You get people from all different types of time frames, from day traders to swing traders to even longer-term investors. And then once that trend gets established, a trend in motion tends to stay in motion. There's less pressure. If you're in a nice winning trade, you know what happens. You tend to want to get even more out of at least part of the trade. So there's less pressure to sell when it's working for you. When it's not working, that's the kind of trades that take up most of your mental attention. And so the reality is you have to learn to get rid of those losing trades, and thus that losing kind of energy drain quicker and get more out of your winning ideas. The third key point would be that the past does tend to get repeated in the future. As the old saying goes, the past may not exactly repeat, but it'll probably rhyme. It'll probably be very similar. And so that we look for these patterns that repeat in the basic premise of, as we go from a growth company that picks up like a Tesla, more and more people get on board, it runs up more and more, and then invariably people get too excited about it, and then it kind of craters back down, and it goes through these boom and bust cycles. So investors and traders will tend to act in a certain way towards the security, and that's where you'll get those fear or greed extremes that'll kick in. And quickly, fundamentals, I don't put a lot of energy into for active trading. Yes, fundamentals matter in the long term, but it can really cost you, not just in a stock trade, but also in an option trade, doubly so. If you buy a call, a bullish position on a, quote, cheap stock, you can really get yourself in a lot of trouble because it might just stay cheaper or get even cheaper, and you're going the wrong direction. So we really need that momentum, that trend to carry us towards our objectives. We're looking at price action, we're looking at volume. We look at those things as technical analysis, and then we're studying supply and demand and looking for these patterns to repeat. So I'll share with you today some of the core patterns that I look for. I alluded to %R. We'll talk about that a little bit more, and then I back it up with some other indicators. Now, when does a trend really get going? I mean, obviously, you can look backwards. I know a lot of people are really good at looking at the left side of the chart, but the real skill comes from applying that towards the hard right edge, the right side of the chart that's constantly changing every single bar, right? Every candle, there's new information happening, and that's what we want to be focused on, how to trade what's happening now and into the near future. We're looking for greater consistency, and frankly, what I found is that there's a lot of traders who will try to trade just on the first little inkling of a turn in an indicator, the first little inkling of a breakout. And if you're too quick to jump the gun and you try to rush in on a, looks like it's breaking out, and then it flips right back down and it doesn't break out, we call those fake outs, also known as whipsaws, and those will stop you out. They'll cause you not only some financial frustration, but they'll also cause you psychological, what we call psychological drawdown. They'll start to chip away at your confidence level internally. This is critical trading psychology. You've got to protect your confidence and your belief in what you're doing, even in the face of the occasional stop out, the occasional drawdown phase. Because guess what? Even the best and brightest traders go through drawdowns, but the key is they're able to manage their emotions and manage their capital so they don't get chopped up too much, and then they're ready to go when things really start kicking again in their favor. Versus a lot of amateur traders will plow in too heavily, what we call plungers. They'll plunge in too heavily, and then therefore they'll actually get blown out too quickly, and they'll take too big of a hit, and then you're not around for the next run up. So a big part of this is managing your capital as well as following a good method. So we've got to filter out a lot of those whipsaws and bad trades. So when it first starts to turn or break out, we call that a setup at big trends. That's not where I want to jump all over the trade. It's where I want to, my ears perk up, if you will. My eyes get a little more alert and say, I need to be watching that to see if we get the next thing, which is the follow-through, what we call the confirmation. So when you see the first inklings of a breakout, we want to see, as I like to say, one bar, one candle doesn't make the trend. We like to see some follow-through. So the setup is like that first inkling that it could be developing, but it's not enough. You don't want to rush into the trade there. That's what a lot of beginners do. That's where they get flushed out too often. We're looking for that extra follow-through step to say, look, I'll give up a little bit of that move to know it's a confirmed valid move in the structure that I'm looking for. So, so from that perspective, you say, okay, a good example here over the last couple sessions, obviously the market pulled back a little bit today, but a good example of that here in the last couple sessions was Yahoo. Okay, let me actually share that with you real quick. So just give you a taste of what we're talking about here. So with Yahoo, and this is on TradeStation, but you can get a lot of these big trends tools across a lot of the big platforms out here. So, like interestingly, Yahoo yesterday, it gapped up yesterday, and we were getting this, that's called the setup. That high is where we're seeing it's that first inkling that it might be ready to go. And this one ever so slightly, not by a lot, it was only by a penny on the third 15-minute bar after the gap up. So about an hour into the trading day, it gave us a confirmed buy there at $40.95 on the percent R. Now the percent R comes back out of the overbought territory. Remember, I believe that overbought can be very good if it stays relatively overbought. I like percent R versus other tools like stochastics and RSI because they'll help me to see what's really happening. Now, it might even help you visualize it a little bit better if I took off a couple of these others that I use for confirming tools, the CCI and the ADX and directional movement lines. But let's just focus on percent R for a second. You can also see I've got my acceleration bands in purple, so we're outside of there and testing our trailing stop in that yellow average there, and it held it. And so it held on the retest point as well. When the percent R comes back out of the overbought area, I don't want it to stay out of overbought very long, so I need that low to hold on a closing basis. That was $40.51. You see the next bar it managed to hold there, and again, then got ready to go. So this is where we were actually looking at not just the stock but some options, and you can see that very quickly the stock, as it started to move back up here from about 40.70, we were in there saying, look, the 40.5 strike call options had a lot of potential, and you can see just over that window where the stock went from 40.70 to about 41.80. So it went up about $1.10, and the one that we were pointing out to our day trading option subscribers was the 40.5 call, saying, okay, look, this is where it's just starting to move here, coming off of that retest here. I'm sorry, that's the 0920. I was actually talking about the Yahoo 0912. These are the weekly options. So that's the 0920s are the next week's options. The 12s expire this Friday. So they're very short term. This is more aggressive option trading. But there it is. So basically right in that area here, that was, we're saying, like up to about 90 cents in here, it would be worth picking up. You can see there it is, hitting 80 and then 90 cents and volume picking up there. And then you can see that it runs up to about $1.25. We tend to take partial profits around a 30% to sometimes 40% gain. So, if you go up from 80 and 90 cents, you're talking about, hey, if I move up in the neighborhood of about $1.20, $1.30 in that range, and then we're saying thank you very much. Well, look, it keeps on going. It goes to $1.60. Usually if I could get a double in a day on any option, obviously you're only trading on a relatively small amount of your capital to be sensible about it, you can see it ends up being a pretty good one. Now, we're done by the end of the day, no matter what. Now, we were already out on our trailing stop, got hit here, and so we're out of the rest here at about $1.20. But bottom line is, look, it finishes about $1.59, but regardless, I would never hold it into the next day for the day trading strategy that we use on the very short-term charts. And by the way, I don't use a 1-minute chart or even a 5-minute chart because for what I like to do, I'm looking to reduce my noise levels. So just giving you a couple of like real-world recent tastes of things that we're doing in these current markets here. So bottom line is, as we go from the confirmation rules here and say, okay, the other thing you've seen me talk about already here, you've seen me talk about percent R. That's Larry Williams developed it, the percent R. These are indicators that I go through in my technical trend trader training course. But I'm going to share with you at the end of the presentation how you can get actually a jump start for a super low-risk entry point, getting 3 DVDs from me for just 49 bucks, teaching you all about a lot of these different tools, plus a lot of option strategies. So the whole principle of a lot of these techniques, like I have a service called Option Shark, where we're just looking for that kind of leverage factor where we boost the leverage by trading options that are fairly close to the current price of the stock. So if you've got Yahoo at 40.5, 40.70, the 40.5 strike call is right near the money. That's going to have the most what we call gamma, the ones that are right close to the current price of the stock. So gamma booster is part of what we look for there. As I mentioned with percent R, we'll back it up with tools like the CCI, the Commodity Channel Index. This is after the outliers. And I'm going to show you a chart here that really, and we do it on just a handful of stocks. There's more than 4,000 optionable stocks and ETFs. I don't want to follow all those. That's too much. I want to follow the most active and the most popular because that's going to give us a lot of other traders to trade against. So I mentioned the outliers. A big part of what we do at Big Trends is looking for the relatively rare trends. Now, if you've heard, I'm sure a lot of you have heard of, for example, a Bollinger Band, right? John Bollinger had a great idea to plot the deviation around the moving average. So if you plot 2 deviations around the moving average, 2 below up to 2 above, say on a typical 20-day moving average, that should encompass within the Bollinger Bands about 95% of the action. Well, guess what? I would rather trade the other 5% that are the unexpected, the unusual moves that are happening, because you'd think, well, that's just overdone, right? But it's the overdone, the super strong or super weak movements that actually can tell you that something unusual is happening. When you go back to the financial crisis in 2008, we were picking up a lot of the financial stocks well before that as big breakdowns and very profitable put trades on the way down. Even though the options were somewhat, or in some cases, quite expensive, they still ended up being very profitable to buy because it was one of those outlier events, those black swans, as the author Nassim Taleb wrote a book called Black Swans. It gets you to understand this point even more. Looking for the outliers, that's where you can really get paid a well above average return if you know what you're looking for. But you've got to have indicators that are geared to find that. The Bollinger Bands don't work for what I'm looking for because they're so quick to react. They don't like to have anything outside of those bands. So that's why I was showing you like my acceleration bands. We'll look at another example of that here in a second. I've already alluded to looking at the option chart, not just the stock chart. And hopefully my pace is not too fast for most of you. Some people, it might be like drinking from a fire hose if you're new to these trading concepts. But bottom line is, if you're new, you just want to soak in a couple of key ideas and work on one thing at a time. So don't panic if it's going too fast. Also, we'll try to get out an archive recording shortly to you as well, so you can re-examine this. Now, bottom line is, when we're talking as an option trader, I know most of you said probably just doing day trades, the occasional intraday stock trade. A couple of you said option trades. But regardless, if I'm trading options, I want to look at an option chart, not just a stock chart. Because what you will find is that there's too many examples of a stock that, or even the market. We'll look at the S&P here in a second. Even when you look at the S&P, you say, well, the market's been in an uptrend this year overall, right? But here of late, it's kind of been a little bit choppier in the last few weeks. And you say, okay, well, pull back a little bit today, and we're going to look at the underlying market versus the chart of the option for the market options on the S&P 500 SPY. So why would an option chart look any different? There's a couple of big reasons. One is there's options, of course, are a time-limited asset. You're going to see an option hit an expiration date. When I talk about weekly options, we're talking about options that have typically 7 days or less to go before they hit their expiration. That seems very risky to the new trader coming in options. And I would tend to say, yes, if you're brand new to options, you usually want to start with something a little bit longer term, and then you can work your way into the shorter term trades. But the weekly options really are a tremendous vehicle, in my view, if you know how to trade them. The volatility is the other big factor. If you trade a stock that's very volatile, you don't pay a premium to trade that stock just because it's volatile. But if you buy an option on a volatile stock, then you're going to pay up for that option. And this is especially a risk right in front of an event like earnings. So you want to be careful about buying an option right into earnings. That can be very dangerous as a strategy. So be careful and be sensible about it. So from this perspective, how do we really then focus on which option to trade? I get that question all the time. Well, guess what? If a stock stays flat, if you're kind of easing into options and you want to be more sensible about it, I would tend to recommend that you would focus on an in-the-money option, because if you have an at-the-money or an out-of-the-money, so we call it at-the-money, say the stock's at 100, you buy a 100 call or a 100 put, those would be at-the-money options, or the strike price matches the current stock price. At-the-money and out-of-the-money options we call OTM, so if the stock's at 100, you bought a 105 call, you need it to move up 5 points just to get to the current price of the stock and strike price matching. Those options are high risk, because if nothing happens, it stays relatively flat, those options risk a total wipeout. We don't like to recommend that for traders who aren't really sensible about how they're going to get out of those real quickly if they're not doing what they're supposed to do. So we would tend to recommend what we call ITM, or in-the-money options. So an in-the-money option means that, let's say the stock's at 100 and you buy a 95 call. That's kind of about what we did with Apple today. We had Apple, stock was about 99, and we bought the 95 call. So with Apple in the money, just show you an example here. Think about this. In the money on Apple means that the stock was trading 99, and we bought the 95 call. So you can see right away, what does that mean if you're new to options? It means that a 95 call was trading right about $5. Okay, you say, hold on, 95 call means I have a right to buy it at 95. It's trading at 99. That means it's intrinsically worth $4. That means that if the stock doesn't move at all from now to the expiration, that $5 that we paid is going to be worth at least $4. So 4 of it is what we call intrinsic value. Okay, that's the intrinsic. And then one of that 5 is time. Okay, so you can break it out into those two pieces. $4 intrinsic, so essentially meaning that you risk losing the amount of time value you pay for. So that's called the time value there. Now, from that perspective, okay, if we lose $1 on 5, you say, oh, that's a 20% loss. I don't like the sound of that. But it sure beats the potential 100% loss risk if it doesn't move and you bought a 99 or a 100 call out of the money. So from that perspective, we would tend to say, okay, on a relative risk versus reward basis, we're basically risking 1/5 of the amount if the stock doesn't move, buying the in-the-money option. It's 5 times less risk than the at-the-money or out-of-the-money if the stock doesn't move. So we have a way to manage that risk. So before I go into showing you how you can get that, and we'll go through some other educational concepts, let's actually take a look, as promised, on the S&P. Let's just see what's been happening here. Let's look at the bigger picture here for a second for the SPY. It's got a lot of my different indicators up here. But just for starters, you can see, yeah, we've had essentially, from about the beginning of July, so right around the Independence Day holiday, we closed right before it at 198.20. And you see today, with the pullback today, we're 199.5. So we're only up about a point over the last couple of months, okay, overall, even though, yes, there was one down move there, and then there was that one snapback move. But you see, even since really about late August, we've basically been just chopping back and forth over the last couple of weeks. So if you keep that in mind here for a second, chopping back and forth over the last couple of weeks, and in a choppy environment, trend signals will tend to be less effective. So we do look at a lot of these other tools to confirm what we're looking at. But let's just look, for example, if you were buying, say, a couple of weeks ago, we were at 200, and let's just say that you were buying the monthly options a couple of weeks ago in September with the 200 strike call. Now, a lot of the big brokerage platforms will have this option charting capability here. So the point I wanted to make is, the index for the last 2 weeks has basically gone nowhere. And if you were paying back on August 26 when it was at 200, you were paying $2.03, especially with what happened today, you'd be down 50% for an index that really hasn't gone down too much. It's only down about a point. You say, okay, well, if I was being more conservative and saying I was buying the 195 call, it's going to cost you more, but it's also going to reduce your risk from the 26th of August. You would say, okay, there it is. It was at 592, and it was actually flat as of yesterday, and even today, down to 490, you'd say, okay, well, you're down a point on about 6, you'd be down about 17%, right? So you can see the difference in risk between those two options. It's about a factor of 3 so far. The in the money is 3 times less downside as of today's close than the at the money 200 strike call. Just an example of the kind of things you can get a taste for. And then we're always looking at our analysis here and looking for, when this thing was moving back here, when the index was moving up, you'll notice the hourly chart showed us a really powerful buy signal on the percent R, where the option is moving up from about 384. Quickly in a few days, it's up to about 5.5. It's just powering ahead, and that's what percent R shows us, is those type of really strong trends, okay? So, the point is, you want to understand when to trade. As you've probably learned in trading as well as in life, timing is everything. It's all about getting your timing down, realizing that not every trade is going to work, but if we can control our losers, get rid of those quickly, and then let our winners run, we've got a really good chance to take advantage of whether it's the equity markets, the Forex markets, or as I like to trade, the options markets. There's opportunities for everybody there. And so what we've done is we said, look, if people bought my technical trend trader course, a lot of times that would cost, many hundreds of dollars, but the bottom line is that I said, look, for people who are new to big trends, I want to ease you into this and have you understand this at your own pace. And so I actually took 3 different DVD courses that I did and basically packaged them into a super special starter pack for both stock and options traders. And so let me just show you that real quick, and we'll go back through a few more of these examples here and more of what we do at Big Trends. But if you're time crunched, I do not want you to miss this. So just real quickly, when you go to that page at bigtrends.com/trade secrets, let me try to pull that up real quick. Where did it go? There it is. Okay. One more time. Trade secrets, you'll see that what we've done is kind of like one of our really most popular trading library combinations, especially for that price point. There's 3 different courses that I did, very professionally done, had cameras capture me speaking to live audiences in all cases, where we're basically teaching you about key principles of trading, and then we're especially focused on option trading just because that's where there's so much more leverage for you to get so much bang for your buck with a very small capital exposure and commitment. So from this perspective, we said, okay, over these 3 courses, it works out to be about 5 hours of content. And so I said, you know what, for $10 an hour, $49 for all 3, and even in the U.S., I said I'll even ship it free in the U.S. And if you're overseas, just a nominal shipping charge to basically cover my shipping costs to you overseas. But basically, as you'll see, this is such a great value. It's essentially a loss leader for me to get people exposed to the way that I think about finding the best trends in stocks and options in particular. So you can see here, the first one is called Automate Your Option Trading. And one of the best things there is I break down 7 really simple key principles and rules that you've got to follow to develop your trading system to really cut your losses and get the most out of your winning ideas. And so from there, we also have the option charts course, where we basically walk you through what I'm looking for when I chart an option. You can chart an option on most of the major brokerage platforms now. For a long time, you couldn't. And I just kept harping about it and saying, I even had a well-known options strategist who told me, why are you even bothering looking at option charts? It's just a derivative on the stock. And I said, well, it's a derivative that obviously has multiple other layers that the stock doesn't have, especially time decay, what we call theta, the decay of that time over how long you hold the option, and the volatility component that's priced in the options that's not priced in the stocks. So you'll learn how to use option charts to tell you, should I trade this option or should I pass? Should I trade a different option? Or should I actually look for a totally different option strategy because maybe it's not moving as fast as I really needed to consider buying the option? So this will dramatically increase your confidence level in the options that you trade. And frankly, even if you trade stocks, it can be a really nice filter to help you know if your stock is moving fast enough to show that the option's heating up enough. If the option's not heating up, I can assure you the stock's probably not going to heat up as much either. They're very linked. And then the final of the 3 DVDs is the 7 golden rules for option trading success. I've got more to educate you on here. I'm not done on that, but I want to make sure if you were time crunched, make sure you go to that page. It's bigtrends.com/trade secrets. I'm just going to paste it in. Thank you. They already pasted it for me. You guys are so good at Cyber Trading University. All the support team there does a great job. Thank you very much. I already posted it up there for you. So bottom line is that you buy this, add it to your cart, and you'll see that it'll include all 3 of the DVD courses. In the U.S., no shipping charge, and if you're outside the U.S., it'll add a one-time charge of $14.95. Okay, so but in the U.S., it's free ship. Okay, so great shipping value, and overall just gets this in your hands quickly to really allow you to watch it again and again. I can't tell you how many people have told me they've watched it 3 and 4 and even 5 times to soak in additional things. And just like this webinar, if you think if you're a beginner or you're new to some of these concepts, it may be like, wow, it's really fast. I need to go back and watch it again. I do that for a reason, because for those that are more experienced, they may say I go too slow if I slowed it down, and then they're not going to be as interested. Once you get more experience, you'll be glad with the pace being fast, okay? Because you can soak up that much more, and you can pick up different layers of information that your mind just wasn't ready for when you're newer to these concepts. So that's why rewatching it is a really good idea. You know, as they say, the mother of all skill is repetition. So repeat watching is a good idea. That's why having the DVD in your possession to watch at your pace, pause it when you need to, and come back to it really can be very valuable. Now, a big part of what I do on all the big platforms is I quantify with specific buy and sell signals, so that we get a buy signal on TradeStation, Metastock, Thinkorswim, other key platforms. You say, look, if we're getting a buy signal here, we want to make sure that we're taking advantage of that buy, and also, more importantly, knowing when, not just when to get in, but also knowing when to get out, when you book the profit, or when you go to the short side. And we've got a whole host of indicators that we've developed across multiple platforms. But a big part of what I do is I'll go in and I'll go study. So like the %R indicator for Apple here. So with Apple, I'm saying, look, if you were following %R in Apple on the daily chart, going back on this particular data scan 20 years. So it's saying, look, over 20 years, how would you have done in that window from 92 to 2012? And we can even update it. But you can see the long trade's very effective. Now, this is when before it actually split. It's since split 7 for 1. So those numbers are going to get reduced, because this is like trading 100 shares of stock on every signal. Before commissions, mind you. So you got to factor in commission. That's why we want to filter out as many of the choppy or less strong signals, so we can really focus on the best of the best trends. You can see shorting Apple over time wouldn't have really made you much money. It would have lost you some money. But that's not a surprise when you look at the condition of the longer-term chart for Apple. And in fact, if I go in here real quick, for example, and show you, hey, this even works across the super long term. If you want to also know that you're on the right side of the longer term trend, you could look at a monthly chart. This is a monthly chart of the Dow, for example. You can see, of course, that it had that monster signal from the early 90s all the way to the end of the 90s, so actually end of 2000, it told you to hop out. In at 3,000, out at 10,400. Got you out before the 9/11 tragedy, of course. Going to be remembering those folks and that whole event here in a couple days, and those folks who have always been our thoughts and prayers. And the bottom line is, dramatically changed our world since. But you can see that wasn't the end of the markets. In fact, the markets did go back into a new buy signal at the beginning of 2004 that lasted until the end of January 2008, and then it said, you need to get out of this. This market is changing. We're not staying in that overbought threshold. Well, since then, look at after the sell signal we had in the fall of 2008, 10,800, caught a 4,000 point downdraft in the Dow over the next several months. And then you can see as we went back into bullish mode actually in early 2011. So it's never going to catch the exact low or the exact high. But you see, even with the debt downgrade that we had here back in the summer of 2011, a few years ago, that was just a classic buy the dip retest. Had another one of those May of 2012, and then off to the races ever since. So would you want to be shorting this market? Absolutely not. This is where a lot of people get gored. They get in trouble because they essentially try to fade a very strong trend. In fact, of course, we broke out into new all-time highs back a couple of years ago, at the base about a year and a half ago, the beginning of 2013. So you don't want to fight a market breaking to new highs. What I love about this system is when I go and review my strategy performance report, if you were able to buy and short 100 shares of the Dow, you can see we've only had about 23 signals, not counting the latest one that we're on. And the latest one we're on, by the way, has made about 5,000 points on the Dow, 5,100 points. So that's if you bought 100 shares, you'd be up 512K. You can't buy 100 shares of the Dow, so this is not accurate in calling it a dollar game, but it's more about showing you the direction of, are you making money with this system? You can see not only are you making money on long trades, and this is going back actually 90 years. This is going back into the 20s. So so the bottom line is that, what's really fascinating is it works for short trades too. And it doesn't look like as big of a number on short trades, but this is pretty cool. Let me just show you this real interesting long-term aside. I'm a big student of history. You may recall back when the market broke down, everybody talks about the crash of 29, but based on percent R, we got a sell signal in October of 1930, a year later after the crash of 29. You see that market bounce back in late 29, early 30, and then it finally started to break down on the percent R in the fall of 1930. 205 was the sell signal, and look, a year and a half later, we were at 40 on the Dow, the all-time low over the last century. They're 40.56. So that was an 80% haircut from 200 to 40 over the next year and a half. That's not that far-fetched, given that we've seen, when we look at the other big sell signal, of course, in 2008, we were talking about it was starting to pick up that sell signal. But you see, when things changed, whether you believed in the bailout or not, obviously that certainly put a prop under the market, and we got an exit there at 8,500 on the short, and the market started to recover. So all in all, it pays to follow these big picture trends as well as the shorter term trends when you factor that stuff in. So bottom line is, when we talk about the kind of topics that I like to cover, market timing's obviously critical. As I said before, timing is everything. You've really got to focus on the biggest and best markets and understand that, hey, a rising tide will lift most all the ships. So if a ship is rising, it's because the market is rising, let's face it, then you don't want to be short a bunch of stocks if the S&P is driving to new highs, okay? Same thing, the gold market's really been kind of lagging here lately. The bond market's been just came off some recent highs. At the end of last year, everybody was negative on bonds. The TLT is the vehicle we like to trade for that. At the end of last year, everybody was panning bonds. Well, guess what bonds have done this year? They've had a nice positive surprise. You can see if you look at the chart for the TLT, everybody's saying, oh, this is awful. The Fed's giving up on their quantitative easing. At the end of the year, TLT finished just under 102. You see, at the end of last month, it was at 119. That's a pretty impressive move for a market that everybody thinks is a market that's got to crash. Guess what? Not a bad return of about 17% as of the end of August. Pretty impressive and actually ahead of the stock market for that 8-month period in 2014. So pay attention when everybody pans something. There may be opportunity to go the other way. The oil market, the dollar, etc. I also share with you my favorite ETF system, my top technical indicators, my favorite option strategies for any market. And then if you have questions, we'll get you a dedicated email. And all of this for just $49 is kind of insane value, but I'm a big believer in exceeding your expectations and giving you great bang for your buck value. So how do you take yourself to true trading mastery? I do believe that blasting off your trading knowledge will tend to be very directly correlated to improving your results over time. There are no guarantees on any one trade, but it's saying, look, if you follow a sensible plan and a sensible approach over time, you can really chart a path to get to your target objectives. You've seen the charts that show that the more educated you get, from high school dropout, high school grad, to college grad, to master's and PhD and all those other advanced degrees, usually the income is directly correlated and going up, and up with higher levels of education. The reason that I think trading is so difficult for most people is it's not just one thing you have to master. There's a series. It's like multi-dimensional type of a approach, and so you certainly need to know where the market's going, what the timing elements that you can use to really get on the right side of the overall market and make sure that the bulk of your trades are lined up with that bigger picture trend. So that's where the technical indicators can help us as well. And then knowing trading psychology, making sure you don't get too high or too low on yourself and on your system and method. And then understanding you've got to then manage your capital effectively. This will also help you to be more sane and not ride the roller coaster of emotions by not overcommitting your capital on any one trade. And then for me, knowing option strategies has helped dramatically to say, okay, now I want to take advantage of the leverage when it's working for me, and I also want to learn how to get rid of trades quickly when the leverage is not working for me. And this is where I would say it goes back to also knowing yourself. That the more you know yourself about what your goals are, how you operate well in the markets and how you don't operate well, where you get maybe too panicked or too worked up or too overreactive. I want to position you to be more proactive rather than reactive. I think being proactive and saying, look, when we get an opportunity to buy a dip in a proven uptrend, we'll do it, and then we'll define our risk, and then if it violates, we'll get right back out. We don't get married to any one stock or option trade. We say, look, this is something where this is a spot that should hold. If it doesn't hold, we put it on with close enough stop that we can say, hey, minimal stop out, and then we can move on out of there. Now, you may have questions as it relates to some of these principles. So if you have questions about what I've shared with you here, I'm going to stick around for a little bit here and answer some questions and call them out. So if you have questions about this method and you want to take a look, if you also want to take a look at how this method is doing on a few of the stocks that you're looking at, we can have you type in a few stock symbols here and also look at a few more examples. Oh, I did promise you, too, that I'm going to show you a quick little overview of the radar screen. So let me just show you that real quickly. But reminder that you go to bigtrends.com/trade secrets, and for $49 you get not one, not two, but actually 3 different DVD courses I did, 5 hours of content for $49 with free shipping in the U.S. It's a phenomenal value and a great way to get you jump-started and pointed in the right direction for if you'd like to take advantage of momentum and trend trades. So let me show you real quickly here, though, the scanning that we like to do, just to give you a taste of how you can use the power of computers here. So, I look at a lot of different stocks. And so, and Shepard says, in Thinkorswim, does %R give you buy, sell, and short signals? We do have it set up for that if you pick up our Thinkorswim toolkit, the Big Trends toolkit for Thinkorswim. If you're interested in that, Shepard, just call us at our 800 Big Trends number, so you can get that there. And mention that you saw us in Fausto's room here, and we'll get you our best pricing on the toolkit. So it's 1-800 Big Trends for the toolkit. Okay. Now, from that, let's see. So if I'm looking on %R for bullish candidates on the short-term intraday chart here, some of you mentioned you like to day trade, okay? Well, bottom line is the names that would pop up here, and we actually had a few that were signaling right into the close. Silver, SLV. Gold was close. That yellow means that it's setting up but not quite confirmed. Green means it's confirmed. So that's Suncor. And let's see what else was confirming late. WellPoint, WLP. So WellPoint was one we were looking at earlier today because we liked the momentum. The market was obviously weak today, so it's something you always have to keep in mind. But, look at this signal that WellPoint gave here. Even with the weak market, when it was breaking out in the overbought territory on the %R, Larry Williams developed this kind of your classic, quick overbought, oversold indicator. But I use it in a different way. When it breaks out, it should stop there if that's going to be the overbought resistance, right? But if it keeps going, that's what I call confirmation. The close above that first overbought bar's high tells me, yes, this is a new buy, so it buys the next bar's open here, 119.93. Notice how it comes right back down just under that overbought threshold here. My scale is a 0 to 100 positive scale. It's a little different than Mr. Williams. And bottom line is that at that point I reset my stop and say, look, if we have a 15-minute close under that bar's low going forward, 119.77, I'm going to get out. You see, it came close but doesn't, and then we shoot up another 1.5 almost to a high of 121.34. Then we back off a little bit in the close. But, from that buy signal, even in a down market, this thing put on about $1 from 97 cents to be exact, 119.93 to 120.90 at the close. Obviously, if you're buying options, you can take advantage of that with an even better leverage. You say a point on a $120 stock doesn't sound that exciting, right? But, for the aggressive trader, we do in our options day trades, Even if you were looking at, say, the monthly options a couple weeks out, and you're saying, because you're saying, yeah, I don't want to buy too little time, so you look at, say, that option from that second bar breakout today. You see it was $1.48. It finished there last trade 219. Even the bid of 201, you'd still be up what, about 33%, right? $1.50 to $2. So that's the kind of thing you say, hey, and remember the market did what today? The market actually dropped. So you can see it worked its way lower on the S&P, actually giving a little bear retest into the close here as resistance on the 15-minute chart. So it's still bearish coming into tomorrow on the S&P for now, but bottom line is it didn't matter for WellPoint. So you find these kind of names and you focus on that. Now, Shepard mentions Fausto does use a 1-minute chart. You can use it for that if you find really quick trades that are really, really strong. So you can definitely find that. It's just that for me, I find that maybe I just don't like to watch every single microsecond on the chart. I like kind of letting the trade develop over the course of the day and giving it a chance, especially with options, because I'm trying to minimize my whipsaws. I think you'll get a little bit more whipsaws on the 1-minute chart from my indicator. Fausto's got his own unique methods that I'm sure I know work very well. But bottom line is, I would tend to say probably the lowest I would ever even consider taking this would be about a 5-minute chart for my own personal preference for this particular method. And even that, you're going to have to prepare for the few more whipsaws and just being prepared, that that's going to happen. But hey, even a 15-minute can have a whipsaw. That one whipped a little bit here intraday, and then it got you back on the short side into the close. It made a little money into the close, but it got a loss on the prior signal earlier in the day. So, bottom line, 199.74. It was to the good by about 41 cents at the end of the day, but you can see from that short, 199.78, it would have lost you about 32 cents on that signal. So overall, you're barely ahead by the end of the day. That happens sometimes. But the point is that it's about controlling your risk. And frankly, what I like to do is even wait for some of these retest points and then put on a trade into the retest. So I'll put on a trade. Now, I probably wouldn't put it on right into the close because you've got the gap risk coming the next day's open. But watch that last little 15-minute bars high and see if it can hold coming into the first 15-minute close at 9:45 tomorrow. If it does, then we could still get some more downside in the very short term. So that's what we're looking for there. And so, again, last one, I promise you to look at one more stock. Let's look at Tesla. So Tesla, great example on the longer-term chart that ever since they reported earnings back at the end of July, you saw the stock react positively to the earnings. And then we saw her see a nice little follow-through, and the daily chart gave a buy signal. Now, on this one, the options are expensive for Tesla. So what we decided to do is we said, you know what? We're not just going to buy a call. We're going to also sell another further out of the money call against it. So that's called a debit spread. You'll learn about that on the Trade Secrets 3 DVD course. But the bottom line is that you can see got a nice rally after we put on the debit spread. Then it came in for a little retest point, and we were actually back to around even. We were up about 30% on the spread, then back to even. But then when it had this next surge up, see how it's staying overbought here? On this next surge up, we actually said late last week, it's on the 4th, when it hit 290, we were able to cash it out at a double. For about, maybe from the buy signal here on August 7th, it was about a month's work. So that was a little bit of a slower trade from a daily chart perspective. But it's saying, there was a lot of consistency to that trend. We didn't risk getting flushed out so much. Since then, it's been settling back down like the market. We're close to that retest. We're not quite there yet. So if I was on the outside looking in on the bigger picture on Tesla, I'd probably wait. But if you're trying to pick up a little short-term move, you can certainly do that with Tesla on your 15-minute charts. And you'll see, you'll be in, you'll be back out pretty quickly. This one gave a sell late in the day and actually gave a retest. Second to last bar there, just under 280 is the high. So, we're looking at that resistance and say, okay, this one could fill back towards the next support back near 275. So I'm not saying you should go short on it tomorrow morning necessarily, but I'm saying, you watch for these things and you look for where there's opportunity to put on a trade with relatively small risk and potentially a lot bigger reward. So that's what you're after here. Like I said, our hour together is up, but you can now take your education to the next level when you go to that page, bigtrends.com/trade secrets. So when you go to that page, you'll see it basically walks you through all the things that you get. I think down at the bottom we may have been, yes, we do, on the tabs. You can actually click on those tabs and look at the course outline for the Automate your options and what the system's all about and really help you define these key elements of your trading system. The options chart piece, if you click on that tab, you'll see that it'll walk you through some of the key elements here that you can factor into your trading, and then the 7 golden rules ties into a lot of the key trading psychology that you can really start to put to work. Understanding the top 10 problems that all traders face, including option traders, but also stock traders, forex traders, and e-mini traders and future traders. Bottom line is it will also spend some time there in option charts, so you'll really get a lot of good information and how to tell you how you can focus on the best of the best opportunities. When you add up the value of all 3 of these together, the first one is a $75 list, the other 2 are $60 lists. You're talking about $195 in value. You're getting it for almost 70% off, $49 all in, no shipping charge in the U.S. When you hit the Add to Cart button, you'll see that I already had it in there once, so you don't have to have it in there twice. But bottom line is, you can see, all you do is you go from there and you scroll down on the page and you just fill out your key information. Of course, it's a secure website. We do not store any credit card information, so bottom line is this is a one-time investment of $49 you're making in yourself to really make sure that you get these principles down for trading effectiveness in stocks, options, and the overall market assessments. You'll learn a lot of those pieces. Just fill out all that information. You can just say that you saw me here in a webinar, or that you saw it in a webinar here, or that I helped you from that perspective, or nothing at all. But bottom line is then you just check on the terms and conditions box, which are spelled out real clearly. With the educational product, basically once you open it, you bought it. So just be aware of that, and I think that's very fair. You know, obviously at $49 is a very low price to pay to get you pointed in the right direction. And then if you have any other questions along the way, we're always here to help. So go to bigtrends.com/trade secrets, get you started. If you have questions, you can always give us a call at our 800 Big Trends line. And I just want to say thanks to the Cyber Trading team there. You guys do a great job, and gals do a great job of putting on great events. It's been a lot of fun to be with everybody today, and I'm going to hand it back over to them if they need to wrap it up, or else if there's any final questions, I can then go ahead and just close it down here in just a minute. I'll leave this page up here for just a minute so you can remind yourself where you need to go, bigtrends.com/trade secrets, and I'll post it. They posted it earlier, but just make sure it's up there for everybody. And again, if you have questions, give us a call. That 800 toll-free number is 800 Big Trends. If you can't remember it, 800-244-8736. Or drop us an email, clientcare@bigtrends.com. Anytime you have a question, we're here to help. I hope you enjoyed it today. I hope the pace was good for you, and definitely look forward to you learning a lot more about key trading principles to boost your effectiveness. And I'm not just talking about making more money. I'm also talking about controlling your risk better. A lot of folks can make money, but then they give it back too quickly. You know, other folks tell me they're not making any money, and I'm saying, how are you not making money when the markets have had so many good trends in there? You just need to know where to look. There are obviously no guarantees on any one trade, but I believe if you point yourself in the right direction with the proper education, then you can really get a significant edge on the rest of the market participants and really position yourself for a lot of great opportunities to come. Thanks again for being with us. I'm going to go ahead and wrap it up. I'll shut down the room now, and I just hope you picked up some of those things that I share with you on the %R rules. You can watch it again on the archive. I shared a lot of the TradeStation charts that I use. So the bottom line is that you can start to understand even that one tool on %R, and that can point you in the right direction. You'll learn a lot more tools here over the 3 different DVDs, 5 hours of training. Thank you for being with us. And again, I'm a big believer in continuing education. I think if you position yourself with ongoing education as well, and whatever the resources are, you decide what feels right for you. But bottom line is that that's really a big secret to continuing to improve yourself, not just for a day or a week or a month or a year, but for a lifetime. I think it'll serve you well. Take care, everybody. Have a good one, and trade them well.